All right, guys, I am back again with another video, and this video kicks off our weekly series, Decrypting the Cryptos with Ichimoku. In this series, it'll be a weekly series put out every Friday where we'll be trading the top most traded crypto pairs, and we'll be using Ichimoku to analyze the markets. So what we'll do is look at these pairs on a weekly basis. If we see any trade setups, we'll let you know about those trade setups also. So we'll analyze everything and let you know how to trade the markets using Ichimoku if you're not an Ichimoku trader. And if you are an Ichimoku trader, we'll give you some insight to that as the way we trade it also. So hopefully this will help you out. Hopefully this will be something that you're interested in. And also, if you want to be alerted as to when the new videos come out, just click that notification button. If you like what I'm putting out today, give me a thumbs up. And then also, if you want to be able to see this all the time, then subscribe and you'll be able to catch this all the time. So hopefully it's something that you enjoy. And if you do enjoy it, let me know. All right. So guys, we're going to get started right now. So let's just kick into this thing right now. All right, guys, before I get started, just want to make sure you see my disclosure statement and understand my disclosure statement. Please read over it and know that I am not an investment advisor. Anything I show and do today is for educational purposes only. So if you decide to take upon anything that I am showing you today, please do consult with your own financial advisor so they can help you to consider all relevant risk factors associated with trading the cryptocurrency market. All right, guys, so please understand that. Now let's get to it. But before we do, I always want to give you a word of encouragement. So today I'm going to give you a word of encouragement that comes from Matthew 11:28-29. It says, rest and relaxation, giving God control. Come to me, all you who are weary and burdened, and I will give you rest. Take my yoke upon you and learn from me, for I am gentle and humble in heart, and you will find rest for your souls. So Jesus offers rest to those that come to him in childlike faith. Jesus invites all people, not just the wise and clever. He offers to find rest for people, and people must throw off the yoke of the burdens of everyday life. In Jesus' time, a yoke was a heavy wooden harness that would be put on an oxen and attached to equipment the oxen would pull. So if you have been devastated by sin, drained of joy by rule keeping, or crushed by persecution or oppression, or anything that has you burdened and pulled down, like you have on a heavy wooden harness, this rest is for you. This rest is for all people. Jesus gives you love, peace, and healing. Now and one day, eternal life and joyful unity with him also. Amen. All right, guys, so we're going to get started. But before I get started, one more thing. Just want to let you see where I'm getting my cryptos from that I'm looking at. Basically, I want to look at the top ones, mostly the top 10 here, because they're pretty much the heavy traded ones. So we'll be looking at those. And if you have any others that you want to have me look at throughout the weeks, just put it down in the comments and I'll add it onto my my selection of the ones that we're looking at. So I have 10 right now, and I don't want to get too far, but usually when I'm trading with the Forex, we look at like 20 something, and it takes a little while. So I don't want to get too bogged down so that you don't pay attention and don't want to really watch it because it's too long. So therefore, whatever you want me to watch or whatever you want me to look at, just add and we'll add it. All right. So let's get right to the markets right now. All right, guys. So we're starting off here with BTC USD. So basically, looking at this thing, I was doing some analysis with this earlier when we were back here, and I thought the market may move a little higher. And then at this point, I said if the market can violate this Kijinsen and violate this high here, then we see the market move to the upside, probably get up to the cloud and maybe correct and then break through again. But what happened here, there's a couple things. But we realized we couldn't get through this level, and we were looking at this as a support and resistance level. So back here again, we also were thinking that we could see price maybe hang at this level because there was some divergence here, okay? But then we lost that divergence and then the market dropped to the downside. Now, I'm really wondering about this level right here, this low of this big wick candle. So I want to see what's going to happen with the market at this point. So based on Ichimoku, we still look pretty strong to the downside. We do have a little rejection here, and I don't have really any like divergence to really talk about. So I think we could see this even break this low here, quite possibly. We did make a new low, all right, but I'm thinking about this level and wondering if we're going to be able to get through that. Now, most people are probably going to ask me, what are my settings? I'm using the default settings, all right, 926.52. I don't change anything. And if you feel like I need to change anything, because I know a lot of crypto traders do change the settings, well, then watch this video that I put out on YouTube, and I'll put it on the back end of this, and you can watch the video. I did analysis of all the time frames and showed you why I think that using the default settings were the best settings. Okay, so I know people are going to ask me that because a lot of crypto traders just change the settings, and you really have to do what you feel is best for you. But you know, even if you change, everything that we talk about still applies, but maybe you may see a cloud that's a little different, or your Tinkins and Kijinsen may be different. All right, so that will change a little bit of stuff. But just looking at where we are on this time frame here, on the daily time frame, you could see this market continuing to show strength to the downside. We were flat here, the top was flat, and we were kind of not even really rounding. All right, so we couldn't say that we saw a correction coming because we didn't even see the rounded area here. So for me, when I'm looking at the market, there's a major sign that I really look for to know if I'm at a bottom or a top, and you can pretty much see it everywhere. Okay, look when we hit this bottom here, when we hit this real bottom, what do you realize about the cloud? It really got thicker and thicker, and you realized you hit a bottom, how thick it was here, and then it took a long time to roll over, but the market moved higher. But that thick cloud, that big thick cloud and flat, that's the sign. So then when you get to the upper point here, where you had even this point here, you had a thick cloud when this market was here. When the market was up here, you had a thick cloud. It didn't quite roll over all the way, and because this is where we are, then it corrected here, and then it broke back through. But then when we had this move to the downside, you could see you found a top, and look what the cloud was like. It was very thick. That very thick cloud means a lot. All right, it doesn't mean that you're going to see the markets move higher more than likely. What it means is that a lot of volatility, you're probably going to see the market move, find the top, and probably move to the downside or upside based off of the cloud. That cloud signal is very strong. All right, a lot of people don't realize that or look at that. So when I look at it here, it was flat. It was kind of thick, but it wasn't rolling over, and now we got angulation to the downside. You got Tinkins and Kijinsen angulation too. So a very strong trade that you want to look for when you're trading with Ichimoku. When Tinkinson and Kijinsen are together like this, take that trade. When they're together angling to the downside or upside, take that trade. So you'll see that many times on any chart. Let me show you. Like when they're angling together like this, take the trade. A lot of times they'll be like on here, they were like literally together, and here they're pretty much right together. When they are both angling like that, you take the direction of that market. All right, now here's some gap here, but you could tell what the market's doing. All right, and it's not as strong of a trend as a move as what we see like with this. So here we go again. I'm just showing you some areas. So here you could see, look at the angulation, and they're together for a long time here. You can't even see Tinkinson. All right, you can only see Kijinsen pretty much right here. That is a powerful signal to follow that trade until they separate, all right, or you get to a support and resistance level or whatever it may be. So you could see that many times on the charts. All right, so that's something to really keep your eye out for when you're trading with Ichimoku. Where we are now, let's mark this bottom. I accidentally moved it. So we have that bottom. I don't see anything that's showing me that that's the end of the bottom there. So where's the next level? Maybe something here. All right. Hold on one second. Let's find this next level where we could possibly be heading to. So we pierced right off of this level. All right, so that's like a double bottom there, and there's no real divergence to show me weakness in this move to the downside. No change of cloud, no change of anything to show weakness in this move to the downside. Now, true, we could get a correction here. So, but I don't think that the move is over to the downside. And if it is, we'll see. But the correction, I don't trade this. All right. So I won't trade this back up because I don't know how far it's going to go up or whatever. But I look for levels where it may move up to. So one of my levels would be this level, this structure level here. And I like to trade these fractal bounces. So looking for the market to correct back up to this area and then move back to the downside. So where I look for the market to, like, this is bearish, so anything below the cloud I'm shorting. So what I'm going to look for is bounces off of Kijun-sen, bounces off of Tenkan-sen, so and then bounces off of these fractal levels. So the market may pull back up into this fractal zone, and then I'll short the market at that point. I'll be following the direction of Ichimoku based off of being below the cloud and then all my other signals. But the market could pull back up to this Kijun-sen too if Kijun-sen flattens out here. All right, so this will be the next level that I look at for following the trend, getting into the move. Now, if you're a counter trend trader, you're probably looking to get into the market here. Now, let me show you another thing that I really like to do, and not pretty much doing it on this video or on these videos, but I made a video yesterday. It's called Trading Ichimoku with Order Blocks. So let me show you what that looks like. Let's go to a 5-minute time frame here. So if you trade, and I trade this with like 5-minute time frame, 2-minute time frame, hourly time frame, but pretty much not anything much more. So we're going to go to a 5-minute time frame, and I'm using Quant Tower. Okay, so if you like this Quant Tower platform, just look down in my comment section. I got a referral link. You could click on that, and it'll take you to this software, and you could find out more about it. But being on the 5-minute time frame, I'm able to trade what we call these power trades. All right. So the power trades, what that does, I can put in, so let me pop it up. There's power trades. So I can put in the total volume. Okay. So I'll put in the total volume, and for 1 second, and 1 second, I want to see 50,000 right here. So I got it marked down. So I got it set at 50, and then I got my sorry. Bring that back. I got my interval set to 1 second. All right, and so set on 50, 5-minute time frame, 1 minute intervals, and then we use these order blocks. So what happens here, every time you can see it painting these order blocks, it's showing where that level had that total volume or more. So whatever volume you decide to put in, because you don't want to put average volume in there, because then that doesn't create what you're going to see as a zone, because that's the average volume. You want to see higher than average, because that's where something is taking place. So you want to see the higher volume, but you don't want to be exceedingly high where you're not seeing any of this. All right, so on this, I have it set to 50 because on the 5-minute time frame. Now, if I'm on the 2-minute time frame, I may have it at 100 or whatever. I forget what my settings are. I got to look at it. But so this market created this zone right here. See this zone right here? So we created this zone, which was right here, I believe, right? No, that's the next one. So we created another one here. I can't see. Oh, here it is. So we created this zone. Then it created this zone. This is where this volume is taking place. And then it created this zone. So look at this zone. I call these order blocks basically because this is where the big block trades are being taken place. So a big block took place in this area here. All right. So when they're trading, and these blocks represent institutional trading activity, okay? And so when you see those, you want to be following those traders because they're the people with the smart money. They're the people with the big money, and they're not the retail trader. So when you see these blocks come in, you're gonna put your zone in, depending on what time frame you're trading. You can trade this with Ichimoku or you can trade it without. My video from yesterday shows you how to trade it with Ichimoku, but without, if I was not using Ichimoku, I would draw this zone here. As you could see, I got my zone here, and then price came back up, and the zone, sorry, let me make sure you know this. So I'm gonna move this off of here. See this box? That was created right there. That's what created this box, the volume. And I have a delta of 97.38%. That's very high. And a basis ratio of 55, very high. So this is a strong zone. All right. So I automatically draw these zones when I see them. And then look what happened with the market, guys. Spiked here, but it bounced right on that zone. You had a move to the downside, came back, had another move to the downside, then came back right here, and then monster move to the downside. Okay, that's where you want to be trading this market. All right, you want to see these zones and be able to mark those zones. Now, this is something for a later video because we're basically talking about Ichimoku, and I can still trade Ichimoku with these order blocks, but not on the higher time frame. So on the daily time frame, I don't really put these blocks in because you're going to see a whole bunch of these on one candle. You're not going to really know what to look at. And if you don't have them set right, this whole chart will be just a yellow block. All right, so you have to have it set right. But if you're interested in this, watch my video from yesterday, trading Ichimoku with order blocks. And also in the bottom of my comment section, you'll be able to see there's a referral link. You can check out this platform for free, Quant Tower. You can check it out for free. Now you won't get the power trades because you need to have the upgraded platform, but you can use this for free. It's a great platform, very smooth, very comfortable. Really like using it. All right, but it could be a little confusing if you don't understand it right off the bat. So I would make sure you got everything linked together and so forth, because if you don't, at the first time I started using this, I thought when I open up my DOM that it automatically linked to the chart, and it wasn't linked to the chart. So got to link everything. As you could see, my watch list is linked to yellow, symbol linked to yellow, chart linked to yellow. If I bring the DOM up, that's linked to yellow and so forth. But I just really wanted to show you that on a lower time frame that you're able to trade Ichimoku with these order blocks. All right. So if you want to find out how to do that, again, it's in my previous video. So let's go back to the daily time frame. Daily time frame. And we'll look at this. So I'm thinking we're going to see a bounce off of this level just because of the rejection we have. And you only have about 2 hours and 42 minutes before this candle closes. With this rejection on this area here, from here to here, we do have slight divergence. So let's look at that real quick so we can understand what I'm seeing. So I'm going to go from here. We're going to the downside. You can see this candle pretty much here. And then at this point, we're kind of upside. All right. So this is the cumulative volume down here. And when I see divergence like this, especially at like a double bottom or a support and resistance level where the market's coming down to and bounces or could bounce off of, then I kind of suspect that when I see this, this is increasing demand right here. All right. And then once you get above this level, you have demand. All right. So that's what you're looking at when you see that. And that's what I use to trade this, anything. I use this cumulative volume for, stocks, for Forex, for futures, and for crypto. So it'll help you to see the divergence and see who's in control, see where the supply and demand is, what it is, supply taking over or demand taking over. All right. But yeah, looking at this drop and with this little bit of demand coming in, maybe we're going to see a move. Again, I think the move comes up to the area here. All right. Or else maybe if Kijun-sen stays flat here, this is where we're looking to bounce, and then we go back to the downside. Will we break this level? We'll see. Because if we bounce up here, push back down, if we double bottom here, we're going to see if there's divergence. But if we push up and then make a higher low, well, then we may see the market move higher. At this point, for me to see structure change, you got to break above this level. And then once you break the cloud, of course, yeah, we're headed out of here. Now, if the market does this, comes up, bounces, makes a new low, then this structure becomes the point. All right, makes a higher low. Then that structure becomes the point where we're looking at the market quite possibly changing direction, because all we're looking at is the waves of the market. So when I'm trading with Ichimoku, I like to look at my wave structure, N waves, basically to continue to the downside or upside. All right. So this is a big N wave. I'm going to looking at the smaller wave per se. So there's a couple N waves in here, but I don't want to draw the bigger wave. So we'll just look at this level, remain at this level. And then also we're going to use our observation theory when we do find targets. So I could show you where I would target if the market comes to a level. So basically if it does come, so if the market does this down to this level where we are, if it corrects, let's say it corrects right to this zone, then you have the development of another N wave. So you'll have a V wave right here. And then the N wave would be the continuation. And you would have to break this low, which is your 2. So you have 1, 2, 3, and then we're shooting for 4. 4 is your observation theory. That's your target level. It's going to be your NT level. All right. Your N level. Then your V level. And then your E level. There's a couple E levels, but I just focus on the first E level. And then that's where we're looking at. Now, I really don't pay much attention to my NT level or my V level. NT level is usually near this 2 level right here, this 2 area, which is the bottom of your I wave and the start of the V wave. The V wave is usually near or close to the N level. So therefore, I don't need 2 lines that are going to be so close to each other because I don't need to be that precise. So therefore, I eliminate that. And then the N level and the E level. The E level is going to be your farthest level, and the N level is going to be what traders know as a 1-to-1 measured move. That's what your N level is, basically. So most traders who trade the markets know what a 1-to-1 measured move is, and that's what the N wave represents. So we're talking about targets at this point, right? And we can't really even set up a target level because the market hasn't stopped moving to the downside and we didn't get a V wave. Once you get a V wave, then you can start putting in target levels. But at this point, it really doesn't make sense to do it. So we're looking for where we're going to correct to maybe. And again, we can correct up to this fractal level and then look to trade the market back to the downside. All right. So that's the BTC USD. ETH USD. So this ETH USD, I have been looking at this a little bit. Want to show you guys a couple things on here. So this again is another strong angulation to the downside, very strong to the downside. Was a little bit flat here where we were here, but you could see this angulation. When you get this type of angulation, this is the trade you should be in. All right, so you broke the cloud and then you correct it. You should have been looking for the trade. Now, my targets are already set because I already have N waves developed. Let me show you what I got. So I'm going to look at a couple levels here. I'm going to show you a couple wave structures. So we would have been at this high and we would have been looking for the market to continue higher, right? So we would have had an N wave to the upside, but it would have to break this level. Well, it didn't break that level. So when it didn't break that level, then we start to think that we're going to see a change in direction. So the market came down, made this low, then made this high, and then the next low would have to violate this low in order to continue to the downside. Well, it didn't right here. So it pushed back up. And then at this point, we start thinking maybe we're going to see a P wave or some kind of Y wave structure. Take that off the chart. And then always you want to get through this 2 level. So this would be your 2 level. So you would have a 1, a 2. So you have this I wave. The 2 starts the V wave. All right. So now you have a V wave. And if we thought the market was going to go back to the downside, it would have to break 2. So when I trade, I'm always trading at the top of the V wave, which is a 3 level. All right. And it automatically lines up with either my Kijinsen right here, as you can see, or else it'll be lined up with sometime Tenkan-sen, sometime it'll be a fractal level, or it could be a horizontal support and resistance level on your chart. And you'll see as we go through. But in order for this N wave to be continuing to the downside, and that's for us to think that this market was going to be bearish now after it got down here, it has to break this 2. So I always tell people we want to trade at the 3, never at the 2. If you're trading at the 2, you're trading a fluctuation level. That's what this level is, a fluctuation level, because this is where the market will fluctuate, and then you may start to see some kind of P wave or Y wave or so forth. And you don't want to be trading at this level. You want to already be in a trade reaching to this level. If this market can't violate that level, then that N wave is not going to be sustained, and the market's going to move back to the upside and so forth. And therefore, you see what it did. So I never want to be getting into a trade at this level. Okay. So let's delete that off the chart. So then we started looking at the N wave reversal. I'm thinking here 1, 2, 3. And then in order for the N wave to be a upper move to the upside, it would have to break this level. All right, so 1, 2, 3, and then 4. But it didn't break that level. Instead, it made a high here and then dropped back to the downside. Wasn't able to get through this point. Furthermore, that point. All right, so now we start looking at the N wave reversal. So we did have an N wave reversal. This is big here. I'm not going to use that wick, and then went here. So this would be your first N wave right there. So now we know the market's bearish. It's going to the downside. So then we look at the next wave, which is the current wave. And what I did was draw my fib extensions on here, and then I'm shooting for this level. This is going to be my N level. All right, the most noted level that we're going to trade target wise. So again, and this will be my E level always. So whenever I mark these levels with my fib extension tool, then this is where it's going to be. It's going to automatically give me my N and E levels, the only levels I really pay attention to, because this would be near NT. And again, remember I told you got to get through the 2 levels. So here we are, 1, 2. Remember I told you your Kijinsen bounce would be near your 3 level. This would be 3. This would be where you get into a trade. All right. So also it lined up with the cloud. You're bouncing on the upper cloud, the cloud levels. All right. And sometime it could be a fractal level that extends over here that you're bouncing on. That will be your 3 level. And then the market dropped. Well, we want to know when we're taking this level trade at the 3 level, where's the 4 level going to be? The 4 level is going to be one of these levels. So therefore, we put our tool on. We mark the tool, and then the tool gives us these levels. So automatically, we're thinking the market's going to hit this level or this level. Now, it doesn't mean all the time it's going to hit these levels. And automatically, already we did hit this level, and we're good to go. So we're going to see if it's going to reach down to this level, which is my E value. All right. So we'll see what the market does. I don't know if we're going to just directly go straight down to that point. We could, but maybe we get a correction. So I'm always looking at where my correction is going to go to, or where a correction could take me. So I look at this fractal level. See that? So I would draw this level and then look for the market to, if it's not going to push all the way back down here, to push back up to the fractal level and then trade to the downside. All right. And therefore I'd have this let me take that off the chart, show you what I'm talking about here. So we got an I wave. Remember I told you I'm always trading at the 3 wave. At the 3 level. This would be my fractal, right? If Kijinsen flattens out, it would be here. If the market's going to push back up, then we already have the 1, the 2. So we have a V wave develop. Then we get here, we would have our 3. I'm always trading at a 3 level because I'm trading what should or could be the end of the correction, and then getting back on the train and shooting for the 4 level, which would be an N value or an E value that we have marked, and that would be this. So if the market pulls back up to this level, move that. So we have this I wave. If we get a V wave, then we're going to be, so here's your I wave. And then if we get the V wave, which would be the correction, then we could go back to the other impulse wave, which would be the N wave. And then we could shoot for the target. We would know where to mark our targets and so forth. But at this point, we don't have that, but we do have a bearish market that's very strong to the downside. I'm not really looking for the market to change direction or anything. I'm just looking for maybe where the correction could be. We could be correcting here. Now this level way down here, which is my E level, could take us all the way down to this bottom here, this low here. See this low? And at that point, we want to see if we have strong support by looking at maybe divergence or so forth. And then if we do have it at that point, there's a possibility that the market moves higher. All right. But right now we're strong bearish to the downside. Look at the angulation on everything here. Let's change this here. Let me change these settings a little so you could see my cloud a little better. Make sure y'all could see my cloud a little better. I put this at 35. All right. Put that at 35. So now you can see the cloud a little bit better. All right, so you could see that red a little more. And now you see that green a little bit better. So therefore, when we're looking at this thing, look at the angulation I was talking about. This is so strong. The angulation here. The angulation here. All right, Chico spans below price and below the cloud. There's nothing to hinder us. So the only thing we have hindering us is these observation levels and a bottom down here. And that's where we're probably shooting to. All right, now we could correct before we get back down to there, but I think ultimately we're heading here. All right, what's that? 2778.1. So that's what I'm seeing with the market right now. No trade opportunity right now. My trade opportunity would be at this level where I just told you. All right, so we would pull back up to the this fractal level or to the Keynesian, and then I would short the market. I'd be in the short. So let's go to SOL USD, SOL USD. All right, so looking at this on a daily time frame, bearish market, very strong to the downside. Look at the angulation again. So look at these N wave structures also. So let's mark these N wave structures. 1, 2, 3, 4. That was one wave. All right. Then you start. So you started with this high. Now go here. This looked like a reversal coming up, right? But then it broke through. You don't really want to see the market move above this level right here for the N wave. But here we just broke through a little bit. So the N wave continued to the downside. So you had that N wave there. And then finally we have this N wave. So we're going to go from here, here, here. You want to see where this N wave could possibly stop. So we're going to mark that, and I'm going to show you. I'm going to show you a couple things real quick with the finding your targets here. And this is very bearish. I don't see a change coming right now, but it could correct, okay? I'm going to show you where my correction levels are. Now, we also want to pay attention to this level here. This could be a support level, so we could be pushing there. But let's mark where our N waves are. So I'm going to show you how these N waves work. So we go here, here, and then if we traded at this level, we would look for our target. So this would be our N wave. So we came down, hit that level. Now, not before we failed here. So here's where we failed. Remember, I told you we don't want to trade at the 2 level. We weren't able to get in. So we get in the trade here. We can't get past the 2 level. So we get profit, and then the market moved higher. All right. So then the next wave, let's see where that N wave is going. So the next wave was like this. And this one a little off a little because we made this high here. But see where we made this wave, and then we pushed right down to the E level. Right to the E level, and then the market moved a little higher. Looked like it was going to honor the N level, but the N level almost lined up pretty much with the with this 2 level right here. All right, and when it lined up at that 2 level, that's fluctuation, but we were able to break through. You could see we had a nice bullish candle, bearish candle breakthrough, and then we dropped down to this right on the N level. The E level. This red is going to be the E level. Green is going to always be the N level. Those are the only 2 levels that I'm going to be paying attention to. So if you took a trade anywhere in this area, you know that you're shooting for the green target or the red target. And therefore, it came right down to the red, which is the E level, and then moved higher. So now let's look at the last level. this is the current wave, and this is where the current market could go. So let me show you what I'm thinking of. This is 1, this is 2, this is 3, and we're looking for 4. 4 is going to be, again, either N target or a V target. Sorry, our E target. We'll leave the V there because it is 1, but it's not the one we're looking at. And it could be an NT, but NT is usually near the 2 level. So we don't really need to look at the NT. So we cross that out, right? So we're looking at these 2 levels again. I already stated this, but let's mark, hold on 1 second. Let's mark this current N wave, see where it could go to. So the current N wave started here, 1, 2. So you're just marking the V wave, and you want to show where the N wave could end up. So the N wave is appearing to break this level. So I don't think we're going to have any fluctuation here. So I think we push lower. So if we push lower, there's the low right here. I think we get down to about, what's that, 132.805. And maybe we can push down to 109. That was, what's that, 132.805. And then maybe we push down to 109.4850. All right, this is going to be your N wave, your N value, sorry. We're already in the N wave. We already have the N wave structure. I'm going to point this all out. This is already the N wave structure. We're just seeing where this N wave is going to stop. Will it be here, or will it be here? Or maybe it could be here, an extended move. So this would be my E value. And this would be my N value. All right. And that's what we're looking at. So there's no trade opportunity at this point right now. But what we are looking for is where could we get into a trade? So if the market drops, if it doesn't come down to this level right away, I always want to look for a move back to my structure area, which is your fractal, and then get a trade in that area. This will be your 3 level also, because what will happen now, we already started to draw this leg out. Now we draw this leg out. If it corrects, it's making that V wave, right? Remember, I just showed you that. So now if this corrects before getting to our target, and then we trade there and maybe gets to this target, we created another N wave. So all we're seeing is N waves in the market. This is how you look at the market. This is Ichimoku, but this is not Ichimoku. This is the market, period. It doesn't matter what market I look at. All markets are pretty much moving in N waves, or else they're going to be in a fluctuation pattern, a P wave or a Y wave. Not a P wave, sorry. Yeah, a P wave or a Y wave or a S wave. We'll talk about an S wave too. Now, S wave for me is a continuation, but the S wave is where I'm getting into the trade. I'll show you that really quickly. So I told you all the fractal levels are where I trade the market. Let me move this off the chart. If I'm trading the market at fractal levels, let's mark those because those are structure levels, structure areas. So this would be the level. Let's mark this level. So the market drops, breaks below, and I look for the trade to short back down at this point. Broke up a little bit higher, but now here's where your S wave comes in. All right. This would be a S wave right here. This, to me, I always say, this looks like a Z wave, not a S, but it's called an S wave. All right. To me, it looks like a Z, but Ichimoku calls that an S wave. And I trade the S wave structure short. Now, see what I told you what's going to happen? We didn't change the power tools, right? So it's going to make all these levels on my chart. I'm going to get rid of those real quick. So we were on this long enough that it did make all these levels. I didn't think we'd be here this long, but I'm trying to give you guys all the detail. And this is why I don't use this on a daily time frame, because there's too many in the zone. You know, you don't know what zone to really trust or what to trade. All right. Now, there's another way to trade these power trades where you can follow the direction of the market instead of waiting for it to come back to the zone. But I'll get into that on another video. But we're good to go here. So I'm going to move into MATIC USD. All right. Then we'll be looking at Dogecoin after this. All right. So this is beautiful here. This is a S wave formation right now with this MATIC. So I do see, like, we could have been looking at a top because we are a little bit thick, a little flat, no angulation. All right. Everything's flat. Tinkinson, Keejenson. So maybe this is a top. And I think we could push higher. All right. But let me show you what I'm looking at. So I would already been looking for a long right here already. And I would have traded this zone. See how this zone is on my chart? Now, another thing is, let's back it up. So on this, before it comes all in, we're on a daily time frame. Remember I talked about these zones? So here's a nice zone. I don't really use it on the daily, but this pair points it out really nice if you have it set up. So look what happened here. The market broke higher, came back into the zone, broke a little higher, then bounced on the zone, and then moved higher. These zones are created with the power trades off of Quant Tower. Again, if you want to get this software, use my referral link down in the bottom, and you can test it out for free. And then also, if you really like it, then you can purchase it and use the power trades. But I'm going beyond myself. We're not even talking about that, right? So let me get rid of that zone. We don't need it. Here's the zone we were looking at. This is the fractal zone. All right, so the market breaks the fractal, pulled right back to it and went higher, then pulled back again, went a little higher. Now it looks like we're getting weak because we made this high, and now it looks like maybe, let's see if this is going to be the high. The cloud's not super thick, but I don't like a cloud like this, but it could still angle to the upside. So the S wave comes in like this. Coming back to this point. And that's your S wave. Again, looks like a Z. And then we're supposed to see this continuation. Let me show you what I see. So where would my targets be? I'm looking to trade. If I was going to trade this right now, and I was trading long, so what I'm going to think about, first of all, we have a nice rejection at the zone. Really, to me, we do have to get through this upper level here. Now, if we fall below the zone, break below Keejenson, I think we're dropping even more. All right, so then I'm going to think we have the 1, 2, 3 structure to the downside, or N wave reversal. But currently, we still have the N wave to the upside because here's what we got. And we haven't violated it yet. This is the V wave. And the only way we're going to violate it is if we don't go any higher and then come back down. We'd have to violate this structure. Then we'd have an N wave to the downside right here. But currently, we're still on the N wave to the upside, which lets me know that structure is still moving to the upside. We have a V wave. And we're looking for the continuation. Where's it going to go to, right? So let's see where the targets are, where it could go to. So the way I do that again, I take my tool. If I'm looking at this N wave here, 1, 2, go down to the 3, because 3 is where we get into the trade. And then you could see this would really take us to way up at the 6761 area, and maybe to the 8010 area if we could break that level. But again, remember, we always have to break the 2 level, which is about 5669 area. So we have to break that 2 level. If we fail to break that 2 level and then we break Keejenson back to the downside, we're going to be bearish. We're going to see this thing fall. But currently, I like the strength that it's in right now. Just because we got a thicker cloud doesn't mean that we're gonna. It's you could see we found the top, but it doesn't mean that we're gonna start a new trend automatically. All right, but yes, you could see we found that top and that thick cloud. Now, if that thing starts rolling over, then and we break this structure here, yeah, we're probably seeing more downside. But at this point, I like the long opportunity right now. All right, and I would be, especially if I'm investing in this thing. Now, for me, I just want to see what way it breaks out of my box. And that's the way I feel more comfortable. If it's going to break to the downside after this rejection, then we're probably moving lower. If I want to see, make sure it gets to the upside. And I really liked it before the last 2 candles, because the last candle, the third candle prior to this, was a rejection candle right at my zone. So I would have been looking at taking my trade right at this level. Would have probably been in the trade already. All right, but then we had a nice little move. It looked like it was happening. But then to this current candle, this is what messed up everything. So right now we want to make sure we don't break structure, which is this whole box. We don't want to close below it, because then we'll be closing below Kijinsen. We haven't closed below any bear fractals, which is a good thing. And until we get that, we're pretty much trading to the upside. All right, so that's what I see with MATIC. Let's go to DogeCat. Doge USD. Looking like BTC USD because this big wick candle here, we still have angulation to the downside. Now this angulation is a little bit different. We don't have angulation with Tenkan-sen Kijinsen. We have angulation with the cloud. We have a little bit of divergence here. All right, as we come back to this level, a little bit of divergence. We don't have big separation, but Kijinsen is flat. We just have a rejection candle. We're still bearish, but I'm not loving the move right now. I think we're getting into a point where we may start to flatten out a little bit. Now, if not, we're going to break lower because we'll break structure here, which we failed to do right yet. And then we'll go back near this area. All right. So currently, angulation is still strong, but we're getting a little separation here. When you get too far away with Tenkan-sen Kijinsen, you're going to get a correction. All right, let me show you that also. So on here, we didn't get a lot of distance too many times, but see, you get distance here. It's going to correct. You're going to get that distance. These two are lovers. They want to be near each other. When they're far apart, they bring the market together. All right. That's what's holding this market, is the love between Tenkan-sen and Kijinsen. If there was no love between Tenkan-sen and Kijinsen, there would be nothing in the market. The market would be all over the place. But yeah, this love that we see keeps the market coming back. All right. Not for real, but you know what I mean. All right, so that's what I'm looking at with DogeCat. Not much really. I don't love this, but one thing you can understand and see is that it's inside of a box. So I always box the market, and it's inside two boxes for me. I'm going to show you the big box is this one candle right here. So can we close below that candle? No, we can't so far. So we're inside this candle. We're inside another box here where we failed to close. So this is more shorter term, which would help us to understand what's happening to the market sooner, is we're inside this candle right here. Inside this candle. So I think breaking out of that candle pushes us lower. All right, because we're breaking that structure. We got basically like a double bottom here. If the cloud wasn't angling like this, I would think we were flattening out. I can't really tell. So that's why I box it in and want to see what it's going to do at that point. So that's DogeCat, Doge USD, Uni USD. All right. You guys trade any of these? Hopefully I'm hitting your asset. Now, currently what we have here is the market pushed lower. So remember what I told you about a thick cloud, right? Look at this thick cloud and then how it rolled over. So we found a bottom when that happened. So again, a lot of these pairs look alike because you have this rejection candle here, this big one. So what we look at here was when we found support a little bit where we flattened out here. I'm looking to see that divergence. Look at that divergence here. Then the market pushed higher. So what we're looking at now, currently the market's still bearish. We broke below Kijinsen. We should be short at this point. We should have been short at this point already. I'm not going to suggest getting into the trade now, but I mean, I would, and maybe I would. But my issue is this. When we pushed up, we broke back below. Let's see if we double bottom here. All right, if we double bottom here, then we'll see if we have the divergence. Cloud flattened out, thick, rolled over, but not completely. Now it's angling to the downside. So we still have some nice move. I want to see Kijinsen move angle because then we have everything angling to the downside. That's when you really want to jump on the trade. All right. So this level is strong. Won't open up. This level is strong. Look how many times we hit. 1, 2, 3, 4. So if we push to that level, don't think we're going to break it right off the bat because it's already been holding for a little while, which means it could break. But it is a strong level. It's a good level. It's a well-noted level, 14.067. All right. So I think now the market could be pushing at that point. Now, if we make a low here that doesn't reach this low, then if we push higher and break structure here, which it basically takes us through the cloud, then we got to change the direction pretty much. All right. I would have been short right now already because the break of the Kijinsen level on a pullback. All right, that's Uni USD. Let's do some sushi. Sushi USD. Man, this is tough right here. This always puts me in like what's happening mode. Again, everything looks the same almost. You can see this bottom we found because we had this big rejection candle that had a low. So we always looked at see if the market could find support at that low. Well, it didn't quite get to that low and it made this flat here. When it made that flat, look at the divergence right here. Look at that divergence. If you don't see it, let me show you. If we're flat here, then this should be flat here too. But instead, this is angling to the upside. This is showing me an increasing demand, decreasing supply, increasing demand, and the market moved higher. Now, is this going to be a bottom right here? All right, because it looks like it's trying to find support at the cloud. All right, if that's going to be a bottom, then because we already got the V wave formation. That's a 1, 2, 3 reversal coming up. All right, because we have the 1, the 2, and if 3 stops there and we can't break that level, definitely moving to the upside and definite break above the cloud is a good trade. And that will take us for this level. So if the market can't break this level here, here's where we're going to be. If the market cannot violate this level right here, we're bouncing on the cloud. Our crossover is bullish, future is bright, Chiku span's above price. Now, one other thing you want to make sure, Chiku span breaks above Kijinsen. It did, but then now it's right at Kijinsen, and then if it closes above, that's pretty much change of direction. All right, so then we have a higher low, and we won't get back to this level. The breakout will be a very great trade, but our target would be, let's say this is the low where we're stopping right now and the market doesn't move any lower. And we're looking for either we take a rejection trade or a break of the cloud here. Let me show you where your targets are going to be. So your target, I'm basically going to go from the bottom to the top and back to this level. We'll be shooting for, definitely got to get through the 2 level, right? And then you'll shoot for about 1268.52. That'll be your end level. All right, so this will be your end level. Then we'll be our E level up here at about 1657.66. All right, but you always got to get through this 2 level, which could be an NT level or something like that, usually in that area. And I think NT is probably going to be around here because NT is going to measure from this deep. And I don't think it's even that deep up here. So NT is not going to even be at the 2 level. It's going to be around here in this area. All right. But NT is a level where if we can't get through NT, we're weak and we're finding fluctuation or we may reverse. You should be getting through NT. That's why I don't mark NT, because I need to get through the 2 level anyway. All right. So I don't mark it. But what I see right now, no trade opportunity, just what I told you. And also one other thing that's really important. We broke structure right here, right? This is the fractal that we broke that created the structural change. I like to trade at the fractal levels. Where's the market right now? I'm going to make that into a zone for you, because I always make it into a zone if it has a wick. That fractal zone, we're bouncing right on that level. Remember I told you I'm always trading at the 3 level, right? So if I'm trading at the 3 level, 1, 2, 3. That's where I'll be in the trade because I got that rejection. Trade past the 2. So it would be 1, 2, 3, and then shoot for my 4s up here. One of these levels is where we're going to be. Now, it doesn't mean we're definitely going to be at these levels, but that's what you shoot for. All right. And this is the 3 area trade that I talk about. You take that entry. All right. So that's what I see right now. And if we do not violate this low here, then we're going to see the market continue with a move to the upside. Now, another thing that could develop is if we fluctuate inside the cloud, start to form some kind of fluctuation pattern, N wave, a P wave, Y wave. We'll see what happens. All right, so that's looking at SUSHI, BCH USD. Let's go down to a 2-minute time frame. I think I was on a 2 on this. Let's go down a 2-minute time frame real quick. Show you guys a little something. Let's see when these come in. Let's see when these pop in. All right, because we're looking at these power trades. That's what I'm looking at. We've been in this session for almost an hour now. Hopefully you guys are enjoying it. I don't want to be wasting your time, but let me show you something really valuable. All right. See where we are. That's there. I can't see it though. I'm looking for the power trade. I want to see where this zone is. I don't think they're all developed yet. I'm waiting for the rest of them to come in. When they're done, it'll show they'll all be yellow on the chart. So I'm waiting for that to come in, waiting for that volume to come in. I'll show me what we got here. Again, if you like this platform, just look down in the comment section. And I did post the link for the referral link for you to be able to get a free trial. I mean, not a free trial. This is free anyway. You can use this software for free. But if you want some of the more powerful tools, you do have to purchase the program. But you can use it for free. Cryptos, futures, Forex, even stocks, depending on your broker. Oh, this isn't coming up. But anyway, what happened was there was a zone here from the power trades. And here it is. You can see it now. There it is. See that zone? All right. So that zone is this right here. At that point, we had 200 volume come in, 200.527. All right. And within a second. All right. So that came in and it made this zone. So look at that zone. Had you marked that zone on your chart, look what happened later. Now, trading Ichimoku, I wouldn't have been taking the trade, but look what it did, guys. And you could have made profit there. Very good trade opportunity there. And if I leave it on my chart, possibility that it comes back to that level again. But look at from that zone, the market dropped way down here, then pushed all the way back up to this level here. That was your power trade zone. And again, I have a video showing you how to trade these zones with Ichimoku. All right. It'll help you to catch these zones and trade the direction, the proper direction. But looking at this also, this was a double bottom. So here's what I like to look at with these lows. This is what I'm trying to talk about when I'm looking at the market. I want to see if there's a divergence here. And I don't see a divergence here. All right. But I like to look for divergences with double bottoms. So let's go back to the daily time frame. We'll talk about this one real quick. I just wanted to show you guys that zone. That zone is very strong concept, especially when you're trading on a smaller time frame. Let's go auto. Let's go to where we are. So this has about 2 hours left in it. That's the zone we marked. So let me get that off the chart. no signs of this market changing, and because we still have angulation to the downside. So let's see what happens when it does get to this level, and then where we could be for our trade opportunity. I look to trade if it pulls back up into this area. All right, then I'll look to trade. So I'm looking for the market to pull up to this area. We still have an N wave structure that's bearish. No targets or anything at this point, but I want to see the market pull back up before I trade. I want to trade it near this level at 42,050. Back to the downside. We need to get through this level, which is, what's that low? That low is about 33.47.875. All right, so I'm looking for a correction, small correction, and then drop back to the downside. That's where I'm going to get in the market short at that point. Where will we end up going to? Maybe that low. I don't see anything else that's super relevant in that area. Maybe this. So in this whole area is where we're looking for the market to pull back down to drop down to. Then maybe we start to see some bullishness develop. All right, so let's go to Link USD. Daily time frame. Real strong market. Starting to be strong to the upside. Remember, these all kind of look alike at one point. Here you go. Flat there, right? So that's where we look for that divergence we saw. See that divergence right here, and the market pushed higher. Made a higher low, so then we're moving to the upside. If it made a higher low, what did it make? It made an N wave. So if it made an N wave, where's the target right now going to be? So it would have started with this low here and then here. So the N wave, we're right on the wave. We're right at the target. We hit the target pretty much at the cloud. And also, like, we broke this level. So and we also broke structure. All right. So we hit the exact target. I don't really have a trade because I think maybe the market now pulls back again. When it pulls back, this is where you want to get into your trade. Right here. So pull back into this zone or around Kijinsen. Then we want to get that cloud change over because we didn't have everything change over yet. But a strong sign is Chiku span breaking above Kijinsen. Kijinsen's being violated by Chiku span. So with that, that's a strong move to the upside. That shows directional change. So let me show you the wave structure right here. We started, so this would be the N wave. And then you correct here, and then you continue your N wave. All right. And I told you we hit right on the nose with this N wave. And then we would correct, see where this one ends up. All right. So that's what I'm looking for with this. Now, if the market's not going to correct, if it's going to break through, I would trade I don't trade the Kumo breakouts, and here's the reason why I don't trade them. A lot of times they're extended. So, like, I want to catch the trade, like, off of this level. I would have wanted to catch a trade, so I would have wanted to catch it down here. All right, because this would be my V wave, and I always want to get into that N wave. So that's where I would have tried to catch that. But if I didn't, all right, because I'm below the cloud, so I wouldn't be trying to get that. And then the breakout, I don't usually trade a breakout because I'm extended too far past this level, which then means if I did trade the breakout, let's see what kind of target I would be looking at. So 1, 2, 3. So I would be wondering if this is going to be the level, but if we did break out, we could quite possibly push up to the E level. So I just don't take them because a lot of times they're too far from, they're overextended. All right, but that's what I'm looking at with Link USD, LTC USD, and then XRP, and we're out of here. Again, we all have these big rejection candle here, so we're always looking at that point as support, quite possibly. And you can see what's happening there. But the cloud is thick, but it's not like flat and rolling over. It's still angling to the downside. Are we at any level? Structural wise, no. I think we could see the market push down to this point in this area. So I'll make this into a zone. And then we could see if we push down into this area. And we're not far from there. All right. We have some divergence coming into the market. but we could still push lower. Now, where would I look to short this? I wouldn't look where we are to short it. I would look to short at this level. So I want to see the market pull back up. I short at this level, or Kijinsen are inside the TK zone. Then I wait for the breakout of the TK zone and then short it. All right. Let's see. So I talked about the distance. Talk about these big C clamps. You see these big giant C clamps. I mean, you found a bottom, but doesn't always mean the market's going to pull back to those levels. But that's it. I think I don't have any trade right now. Just the levels where I'm looking at to get into the market would be what I just showed you, 144.030, and maybe the Kijinsen level if we get there. So we may correct off of this level. All right, last one, XRP, USD. So you want to know if the market's going to continue that move to the downside. Then look at your structure, your wave structure, your Ichimoku wave structure. Because you're flat here, that's where we're looking for divergence, and the market pushed higher, but then was able to come down. Didn't make a higher low, it made a low right at this level. All right, so we find support here. When we get a little bit of distance and no angulation. So XRP is flat. Maybe we found a bottom. Maybe we're going to bounce off of this level a little bit. You can see a little bit of distance, nothing major. No angulation, so we have no momentum. All right, and then we're flattening it out here. So no momentum on XRP. A lot of rejections on the bottom here. I probably think maybe we push off of this zone, this level, for a little move higher, and then we'll see what happens. But at this point, I have no great area to get into the trade right now. And I wouldn't be shorting it at this level. Okay, worst level for me to short it. Then I'm a breakout trader. I'm not a breakout trader. I'll be breaking out of this level. For me, once it breaks, I need to see this. I need to see the break, the correction, and then I'll trade at that point when resistance turns into support, or support turns into resistance in this case. All right. Where are we here? We're pretty much done, right? Showed you everything that I think could happen or might happen with the market. That's pretty much it for me. Again, I'm using Quantower and I'm using their power trades tool on the lower time frame, using Ichimoku on a higher time frame. If you want to know more about how I do this stuff, you can come to my website. You could watch all my YouTube videos. You could watch the last video I put out. Shows you how I'm trading pretty much with the order blocks. All right. But hopefully this is helping you guys out. If you like this and you enjoy this kind of stuff and you want me to keep doing this on a weekly basis for cryptocurrencies, I will. I'll continue to do it just like I'm doing on a weekly basis for Forex using Ichimoku. All right, guys. So hopefully this stuff is helping you. All right. And until next time, have a great one. God bless. So long.